Hi, everyone. Thank you so much for joining today. I wanted to walk us through our forecast, mainly because so many times we get the question, what is a forecast, right? We mention it a lot. It's one of our 4 tools that we really believe have helped get through so many businesses through COVID, as well as just our great foundation. The information that you, the owner, need to know really starts with your budget, but then ends with a weekly accountability for your team. But I think what happens a lot of time in business and in reality is we get bogged down in the question of how much information should my team see, how much information should my manager see. I don't want them to see everything, and then we get lost. So the idea of a forecast is really our answer to that question, because that's probably one of the top 3 questions that we get here every week. So to answer that question, what we've come up with is what we call our forecast. And as we're going to walk through today, it really helps bridge that gap between financial accounting information, which is always historically looking backward, right? It takes 10 days to close the month, and I have to wait till the credit card statement comes in, and all of those things, which are very important from an accounting standpoint, to you being in your business, in your restaurant every day, and the information that you need to be successful every day in that business. So what we're going to do today is kind of take a high level look at what is the forecast. When we say forecast at the Lager Group, what are we talking about? Because I think that's a very important question to answer, because I think what you'll find is this is not a hard step or a hard leak from what so many of you are already doing, but it really is a way to get this critical information in the hands of your managers without showing them everything and getting bogged down in budget to actual of every operating expense, but enough information so they know, was it truly a good week or not? And that's really what we are trying to answer here. So what you'll see is, again, history of the Lager forecast is really something that we developed during COVID, right? Pre-COVID, just like everybody else, we were monthly accounting. You would get your P&L at the end of the month. We'd go through it. It would be budget to actual. That was great, right? Everything changed in March 2020, as we all know. And all of a sudden, monthly was too long to wait, right? I don't want to wait 4 weeks before I give my manager any sort of update on the finances. I don't want to wait 4 weeks before I know if my business has been profitable or not. And I really need to make decisions today. I need to know how much my business will suffer if my sales go down by 50%, or what happens if, my catering is gone and my bar business is gone. And all of those questions that so many of you reached out to us during that time is what we use to develop the forecast, to say, okay, we might not have everything and we might not know everything right now, but we know enough to come up with an estimate. And that's really what we're trying to do, a forward-looking estimate based on some of these key variable changes, so that you can see what is the difference in my cash flow, right? Because as you remember, in 2020, what does cash flow look like if my sales are 50% is a real question that we had to answer. And I think you'll see that even though we're not in COVID, there's some big questions that we all are going to have to answer even this year, right? With inflation or labor or maybe a sales decline. So having a forecast will enable us to make those good decisions every week without this, I have to wait till the end of the month or wait till the accountants do their thing, right? Because that's all important, but it's also important that you have the right information right now. So again, history of the forecast is that at the end of the day, there's so many times that we hear from you, the owner of the business, that says, I don't want to share everything with my managers, but I want to share enough so that they are aware that we are profitable, or aware that we're not profitable, or aware of what sales need to be to get to profitability, right? And so bridging that gap is very important without giving them too much information to where they're bogged down and lost of focus, or things they can't control, like, why should I show him rent? He can't control rent, right? All of that is true. But when you're in a crazy time like this with 4 different variables changing at once, everybody needs to see the bottom line in order to make sure that we all have enough information to make the right decisions. So again, I would look at it as a team, right? If you're looking at a football team or a baseball team, the coach gives a lot of information to the players, right? I mean, they have to know everything about the game plan in order to be successful, right? The defense doesn't just know about the defense. They have to know everything in order to really work together and be a team. And that's sort of that same mentality with this forecast, right? We're not giving them all the details, but we're giving them enough to say at the end of the day, this is our common goal, X amount of sales, X amount of cost of goods, labor, but that all comes together for this X amount bottom line. So the benefits of a forecast is that it will give you the ability to provide your team the financial information without showing all of your numbers. Also have the ability for the team to understand break even as a bottom line and the ability to track their performance every week. So again, also speeding up the number of times that we measure our business, because if we wait once a month, then we're going to make 12 changes to our business every year. But if we analyze it every week, we have the opportunity to change 52 times, right? And I know it sounds like a lot of work, but it's true, right? We have a chance of incremental improvement 52 times versus 12 times, right? I'll take the business that's looking at it every week any day, because they're going to make better changes and better decisions every week versus waiting till the end of the month. So again, forecast as a term was really built on the idea that we know weather forecasts are wrong, right? And that's okay, but it's the best information that you have at the time to predict a future outcome, right? That really is what we are trying to do here. And so your manager knows, hey, next week should be a good week for this reason or that reason, and all the way down to the bottom line. Or we really need to work on sales because it's not enough, right? And that's really what we're trying to share with our team. The big difference is in the details. The forecast is not designed to be detailed because it's designed to be quick. Again, in the last 2 years, you guys have lost a lot of your management time because of labor shortages and changes in vendor pricing and all of those things that you've had to do. So you may not have 6 hours to sit down and go through every line of your chart of accounts. But what we're saying with the forecast is we can at least get you close enough to where you can make good decisions on a higher level every week, and then still do that detailed budget piece at the end of the month. So what you'll see is the forecast is built on the basis of the budget, but the two are different, right? The budget is where you're going to go line by line. You're going to set targets and really understand the changes in cost, the changes in sales, changes in labor at a very detailed level. Forecast is going to be something that's going to give us more macro view, wider view of this week and what we can predict next week based on what we know this week. So the 3 main categories of forecasts, again, this is quick. This is meant to be something that, gets updated 10 minutes every week, but it's that consistency and that data, because I think a lot of times what we already do is we maybe look at things every week, but we don't write it down. So if I asked you, well, what was COGS 4 weeks ago? You're like, oh, I gotta go look that up, right? I don't know. But if we are tracking it and we are building these forecasts and then tracking our actual, which we'll see as our next one in our scorecard, we have that data. I could tell you what costs of goods have changed in the last 12 weeks just by writing it down. And that's where the difference between, I looked at it, but did I really write it down? Am I building a data sheet for my business? That's very important. So we can always have the trends right at our fingertips, because something that may not seem like a trend right now may be a trend in 12 weeks, right? 2 years ago, I was like, oh man, paper products, like they really spiked. I don't think we'll call that a spike anymore, right? Because it's been a 2-year incremental increase in paper products. So tracking that, building our own data set. What is the data that you want to know is all very important. So that's really part of what we're doing. And it starts with this weekly look at your business and weekly tracking of our forecast. So in our forecast, again, it's high level. It's 3 numbers that are important. First number is cost of goods. Now we're looking at everything combined. The budget, we are going to have everything broken out into very specific categories that are important so that we can hold our team accountable to their spending. We don't have time to do that every week. We could do a weekly budget. That would probably be an ideal world, but most of us don't have time to do that. So if we don't have time to do that, then we're going to put cost of goods in one category. We know it's not food over food. That's okay, because again, what I'm looking for in my forecast is my trends. Am I getting to my average cost of goods every week? And if I'm not, am I trending up? Am I trending down? What is there one week that spikes, the next week doesn't? The other really good thing in our forecast is it's built on a 4-week rolling average. So If your team does not have time to do an inventory, again, inventory, yes, very important. Ideal world, we want to do an inventory every week. If that's not attainable right now, the weekly forecast over a 4-week period will give us our average cost of goods, which is what we're going to use for our forecast moving forward. Now, if my team is not taking an inventory, I know it's going to be like this, but I want to make sure that I still get back to that average over the 4-week period. So that's very important. Same with labor. Now, again, budget's going to have every position broken out. It's going to have all those changes. Here, we just want a total labor, because really what I'm holding my team accountable to is that total dollar amount, right? As a percent, including taxes, because that's the true labor number. That's what it costs me to have my employees every week. Now, again, if my payroll is bi-weekly over a 4-week period, I'm still going to have 2 payrolls. So I'm still going to be good there. And then operating expenses, it's going to be one number, but included in that number is everything else that it takes to run your business. So could even include owner salary. That would be the one change, is I would move owner salary out of labor and into just operating expenses. Because again, we want the labor to be something that we hold our team accountable to. Operating expenses is going to be everything else it costs to operate. Okay. So what will my team see? My team will then see over the 4-week period, I have my sales projection, I have my cost in dollars. Now you may want to add percent on the side, but that would be my cost of goods. My team will see the labor, again, based on my percentage. I'm just using my averages here. And then the big one here is operating expenses, because how many times do we stop with cost of goods and labor? And then our team thinks, right? Like if this was my team thinks I'm making $9,000 a week, right? They're looking for raises. They're like, what the heck? I mean, you guys are doing really well, but they don't know that there's another $7,300 a week that it costs to operate this business, right? All in, everything as an average, all in. That's what we want that operating number to be, so that my team knows that really my profit is $2,300 a week, that it's a lot closer to break even than we think. But if they don't see that bottom line number, it's hard for them to really understand your urgency or your frustration when, oh, we had a week that went to 24,000. That's fine. You're going to make 9 grand. What? You only made 7 grand, right? That's what they think. But then you all of a sudden show them, no, I mean, we're at a $2,300 a week line. So if, something breaks in the kitchen and we had to pay 3 grand, that's the frustration that they understand. So without getting into the details, it's very important that they see that third number, because they have to understand everything it costs to run the business, so that they can understand where profitability is and the importance of the sales number to make sure that we're at a cash flow positive number. Now, with the operating expenses, I don't think it's worth going through everything that's actually spent in operating expenses every week, because again, you're going to have rent that's paid once a month. You're going to have utilities that are paid once a month. All these other things that are more sporadic than your cost of goods and your labor. So here, what we're going to do is we're going to take your operating expenses from your most recent P&L and then just come up with a weekly average. It's not perfect, right? There's going to be weeks where you have more cash than this shows. There's going to be weeks where you have less cash than this shows. But over that 4-week period, we should be very close to our budgeted amount for our monthly budget, right? So again, this is a way to translate the importance of that monthly budget to something that our team can see and understand every week without having to get bogged down in the details of the budget. So the benefits of the tool is really that the weekly forecast, we're able to predict our cash flow, right? Because if I've included everything in my operating expenses, my $2,300 a week should be pretty close to the cash I bring in. Won't be true every week, because there's going to be timing, especially in those operating expenses. So if you do this for a week and it was the week rent came out, not going to be the same, right? But over that 4-week period, we should be very close to our operating cash flow, which is one of our other tools, is our cash flow tool. So that also works well with this. The other thing that we would maybe want to include if our goal is to really get to a cash flow bottom line would be any debt service. Because again, if you're looking to show your team what it really costs to operate, and you had to take out an SBA loan to build your building and it's 7 grand a month, I would include that in the operating expenses. They need to see everything that it costs cash wise for this business to operate so that they can understand your true bottom line. Now, again, this is not the financial accounting world. This is not something that's part of the tax return. This is trying to translate all of that important information that is part of your accounting to something that your team understands. And that's where we're here. Okay, so then we may want to include debt service, and we really want the team to understand our bottom line on a weekly basis. Sorry. Okay. So the final piece here that's very important, because this is another question that this tool really helps us answer very clearly, is our break-even point. Again, with so many things changing and, COVID of the last 2 years and all of that, cost of goods going up 5%, 10%, it's very important to be able to calculate our break-even point on, let's say a back of the napkin type of calculation. So with this tool, we are able to calculate our break-even point. Here is the steps. So this little box over here came from our forecast page here. So that's just so you know, that's where that came from. So taking that forecast, using 1 week, but you could do this over any amount of time. The first step is to calculate your prime cost. So most of you would know that, but in case you didn't, it should be your cost of goods and your labor. So the 79.20 plus the 98.83, and then divide it by our sales. So that means my prime cost is 64.7%. So to do break even point, it's actually taking your profit. So our prime cost percent is our cost. So somebody brought up, which was really good advice, that sometimes it helps to do what they call a common size income statement, which means you're basing everything on $1. So of $1 sales, it cost me 64.7 cents just in my prime cost, right? Which would mean that my contribution margin, or my profit without my operating expenses, is 35.3%, or 35 cents. So 35 cents on the dollar is what I have left after my prime costs. Now, the third step for break even is just taking that operating expense number, that 73.79, and dividing it by 0.35, which was my contribution margin. So if I do that, then what that tells me is my break even point for this restaurant would be 21,470. So that is a great number for your managers to know, right? And again, might not be true every week. There's going to be highs and lows and things we don't expect, and repairs and all of that. But this would be a great starting point to say, we at least need 21,000 in sales, right? We want maybe 25 or 27 or 30 as our goal, but this is a really good number to be able to calculate, because if there are those slow weeks, or even weather shutdowns, right? In the winter up north, there's snow, or hurricanes in Florida, right? Things happen, but it really is important to always be able to get to our break-even point pretty quickly. And I think with this tool, and even without this tool, this calculation, you should be able to calculate that anytime you need it. So that was really what I wanted to share with you today. I think the forecast tool might sound scary, but it really is just merging together so much of the information you already have in your business in a way that your team can understand. Because I really encourage you to get your team involved, right? It doesn't have to be you carrying the weight of this. Your team needs to know what they need to do to make the business successful. Because I promise you, if they're on your team, they want your team to win. Right? So we need to explain to them exactly what needs to be done for the business to win every week. If you do have any questions or need anything from us, please feel free to visit our website, thelargogroup.com, where you can always register for additional courses or request time to speak with us to talk about this tool or any of our other tools in more detail. So thank you very much, and have a great day.